Hello friends. I was just making a weekly review farming for euro dollar, so I thought to record a video, and so as my other friends, those who are interested in the trading can also view it. So in the last week, not in the week that we passed, in the last week that is ended on 8th August, we see that uh, market closed on Thursday session was did not close above this session. It was a doji candle and followed by this bearish candle. So actually we are after, if we see the trend on this NFP, it was a huge bullish candle, then followed by next week candle which is a bullish. It suggests the market is in the bullish trend. So these two candles of the Thursday and Friday suggest that there's a likely somehow correction. So where we can see the correction, so the PD array was, in my view, was this daily FEG. Market is likely to come to this daily FEG and then may continue towards its higher trend. So and how it will come, there are two possibilities: that it may come by taking this Friday high, number one, that is called our previous day high. Okay, then we have previous week high. Okay, either the market will take this first liquidity and then go down, or it may directly come here. And so I would prefer to go on H4 chart and see what market has done. Let's see. On Monday, market open, went above and then closed up without taking this liquidity. It means that the market has left this liquidity to be taken later on. First, their objective is to fill this imbalance, that is called the daily FED. Okay, on daily chart, we did not close below this FEG, we close above this FEG. That is a strong sign that market is in the bullish trend and will continue its bullish trend. Since Tuesday was CPI day, so we have to wait for news to release. So where we can plan our trade, go to 1 hour time frame. We are on Tuesday, on day of CPI. Yes. After CPI, this candle closes above, which shows a market structure shift. Right after 1 hour, after 6 p.m., this candle came down way into this mitigation block, or you can say yeah, it's a mitigation block. Let me highlight that. Here we have entry. and I guess the trade that taken by Javed, our commando, has also been in the here on this, with the target of, the first target would be, if we enter here trade, first target would be Monday high, then you can target a Friday high, obviously. Then targets we have a previous week. Let's see how the trade plays out. On CPI day, they took a liquidity of both Monday high and Friday high, but did not take a previous week high. So we are on the day of Wednesday now. Let's go to 4-hour chart to see what is on the 4-hour chart. Since this has already been mitigated, let's delete this. Let's delete market structure shift. So on Wednesday in the Asia or in the London, I was expecting that the price will first retrace this FEG into FEG and then will go for previous week high. But let's see how does it go. Without taking this liquidity of this candle, this candle, this candle, and this FEG, the market keeps on moving upward. So I actually was planning for here buy. Since it did not retrace, then I had this 4-hour FEG. Bearish FEG. Since we are already in the premium zone, and there was also what I call bearish breaker. So I was planning my trade here, but with the condition that this candle or a 4-hour candle at least sweep this liquidity and close below. So I took a trade here on the 15-minute chart. My entry was here. On this bearish order block, all the way to bearish FEG. It took very long time since I was suffering from emotions as well. It took a very long time and I had a patient. It gave me 1-to-5 risk to reward ratio, and let's see how this plays out. Now we are going into Thursday session. It was a highest probability trade because the market left these liquidities untapped, and this FEG, if it would have on Wednesday session, if it would have taken this FEG first, and there was the high probability buy trade, but it was not then supposed to come down. On this candle, on this low, I took a partial, closed my 60% of the trade and left the remaining open, and here did hit the trade. and from there I was also planning for the buy, but it hit a stop loss. I was actually planning I in fact took a trade on here, daily bullish order block, that is the open. On 15-minute chart I took it, but it hit a SL. So that's a lesson that I have recorded already and take a journal entry. I actually took a trade here when it's not here actually, it came again. Yes, I took a trade here. Trade, because since she's a rejection from this and my SL was here, targeting 1 to 7 risk to reward, not 1 to 7, is actually 1 to 3 risk to reward ratio. This, and market eventually went up, but after hitting my SL, well, let's see. What is on the daily chart position? After seeing this, actually, this bearish candle closed below this. As you know, I need a sign of a caution, because if this is engulfed and closed below, may show a sign of some reversal. So I was planning on Friday a sale, but in fact it did not give me the entry. I took some trade over here at the rejection block on this here, and the market was chopping here and here and here. I closed 0.5% profit. That's all the review. And what's the position on the weekly chart? It's bullish. It has closed above previous week high. So first target would be this rejection block, and then these swing highs. That's all from the review. Thank you.